Welcome to Mortgage Law Minute Live. I'm Mimi Paxson, Associate Director of Business Development at Polinsky Vital Green. If this is your first time joining us, we publish a monthly Mortgage Law Minute that covers a variety of mortgage-related topics. Joining me today is our Associate Attorney, Ty McWhorter.
Thanks for having me, Mimi. It's great to be here.
Absolutely. So, Ty, in a previous interview, we had talked about additional collateral and how it is prohibited when it comes to non-owner borrowers and home equity loans. You had used a scenario where a parent wants to help his or her child qualify.
Yeah, that's right. And we discussed about how when that parent joins by signing the note as a borrower, if they don't have a homestead or ownership interest in the property, that parent would be considered a guarantor or surety, and therefore would be considered prohibited additional collateral. In a similar vein, I wanted to talk about VA and FHA home equity loans and why they are prohibited and uneconomical, respectively.
Okay. Why don't we start with VA? Why is it not allowed?
Yeah, for a VA, the Texas Constitution makes clear that Texas home equity loan may only be secured by the borrower's homestead. So anything that's not the borrower's homestead is additional collateral, which is expressly prohibited. With a VA loan, the VA guarantee would be considered additional collateral. And we can make that determination in two places. One being that the Texas Administrative Code expressly states, quote, that a guarantor or surety is not permitted. A guarantee or surety is considered additional property for the purposes of Section 50A6H, end quote. So VA guarantee is just that. It's a guarantee that's prohibited under the Texas Constitution. That can be reiterated in 2018 by Attorney General Paxson when he issued the Attorney General opinion that specifically stated, quote, that the fact that the VA provides a guarantee on the loan and thus serves as collateral other than the homestead precludes a VA cash out refinance loan in Texas, end quote. So that reiterates our previous point. Guarantees are prohibited. VA guarantee is a guarantee. Therefore, VA home equity loan is not legally acceptable.
What about FHA? Is it not acceptable for the same reason?
That's a good question because the answer kind of seems counterintuitive because when you're thinking of VA and FHA loans, you're thinking of them as government-backed mortgages. But a VA is a guarantee and FHA is a contract for insurance. And contracts for insurance have a history of being treated differently under the law. And in fact, the Texas Administrative Code expressly references fees for mortgage insurance protection when you're doing the calculation for the 2% fee limit. Therefore, you can intuit from that FHA mortgage, FHA insured home loans are acceptable for home equities, unlike that VA guarantee. But regardless of that, FHA mortgage insurance premium or MIP requirements render FHA home equity loans not financially feasible.
Can you expand on that?
Yeah, because the Texas Constitution requires fees to not exceed 2% of the principal amount of the loan. So while there are exceptions for specific fees, FHA's mortgage insurance premium is not one of them. In fact, as we mentioned earlier, the admin code specifically states that premiums for title insurance or mortgage insurance protection are considered fees that are subject to that 2% limitation. The admin code then goes on to say that that 2% cap pertains to any fees that are paid or contracted for by the borrowers at the closing of the loan. And since those future MIP payments are agreed to at the closing of the loan, that means that the MIP payments throughout the whole life of the loan are subject to that 2% fee cap, which it would easily exceed the 2% fee on just the MIP alone, say nothing of the other fees that need to be calculated.
Could the lender issue a credit for the MIP to get it under the 2% requirement?
Technically, they could, but at that point, the loan's not financially feasible. Additionally, the lender must charge premium pricing in the form of the higher interest rate to fund the lender credit, but that premium pricing for the credit would likely cause the loan to fail the Section 32 high cost test under TILA, or it could trigger other compliance concerns. But outside of that MIP issue, the FHA guidelines don't indicate that a home equity loan would be possible under FHA rules. And the FHA does not provide any promulgated forms for Texas home equity loans. For all of those reasons, that's why you don't see lenders doing it, FHA home equity loans.
I see. Thanks for sharing your insights, Ty. Always a pleasure to speak with you.
Thanks for having me. It's great to talk with you.
To read more about this topic or to subscribe to the Mortgage Law Minute, information will be available at the end of this interview. Thank you for watching, and we'll see you again soon.